Tax Practitioner's Responsibility for C.T.A. Advice to Client. To safeguard your client, a tax practitioner must view this compliance video and distribute it to others. This segment is about the practitioners and taxpayers' rights to file a B.O.I. report on FINCEN by following C.T.A. ACT. What measures should you take to avoid being sued by a client for not informing them of B.O.I. filings? Make note of the clause in this episode that protects the client's claim against a tax professional's failure to inform them about the consequences of B.O.I. filings. What are the responsibilities of the practitioner? Based on the client relationship of the tax practitioner, a client may prefer to seek advice on the Corporate Transparency Act, C.T.A., from the tax practitioner instead of their attorney. Practitioners who choose not to offer C.T.A. services could still be confronted with professional risks for a client's non-compliance in certain circumstances. If practitioners fail to inform clients about C.T.A. filing requirements and respond promptly to questions about C.T.A. compliance requirements, they may be held responsible in certain situations. If a client incurs damages related to their non-compliance with the Act, they may blame the practitioner, and such claims may be significant. How can an engagement letter safeguard a tax practitioner from being sued for beneficial ownership information reporting? Including a provision in engagement letters that disclaims responsibility for providing C.T.A. assistance is recommended to avoid any doubt. By including this provision, you can protect yourself against a client's assertion of "you did not tell me." Sample of an engagement letter regarding C.T.A. compliance. This engagement does not involve helping you comply with the Corporate Transparency Act, C.T.A., or reporting beneficial ownership information, B.O.I. If you are solely responsible for meeting the C.T.A.'s requirements, including B.O.I., reporting and gathering relevant ownership information, we assume no responsibility for your failure to comply with C.T.A. At fincen.gov/BOI, there is information about B.O.I. reporting requirements. If you need help with the C.T.A. reporting requirements and the collection of relevant ownership information, consider consulting with legal counsel. Why should engagement letters include a provision about the Corporate Transparency Act, C.T.A.? It clarifies that C.T.A. compliance is the sole responsibility of the client unless specifically engaged for it. Is it legal to submit the FINCEN report? Accountants can interpret tax law under Title 26 of the U.S. Code with the help of Treasury Circular 230 and state accounting statutes, but it is limited. The interpretation of C.T.A. statutes which fall under Title 31, Money and Finance, of the U.S. Code, is not clear. To safeguard the public from those without the proper education and training to offer legal services, all 50 states have laws against the unauthorized practice of law. According to the Treasury Department, it is their responsibility to determine who has the education and training to provide legal advice on federal tax law. Circular 230 provides guidelines for tax practitioners who are federally authorized, which includes lawyers, C.P.A.s, and enrolled agents. Number 1, law may consider providing technical or interpretive advice on C.T.A. as a practice. The state defines the practice of law, not the federal government, and can prohibit the use of unauthorized practice law, UPL. Number 2, an individual who is not licensed to practice law can consider UPL to be the practice of law. A person who is licensed to practice law, but has not been given permission to practice in the state where acts that equate to practice take place. Number 3, Circular 230's protections have resulted in the failure of multiple state charges against CPAs who were accused of practicing law in the tax area without authorization. C.T.A. filings often consist of a simple presentation of facts that do not raise any concerns about unauthorized practice of law. CPAs might have to weigh the pros and cons of handling more complex C.T.A. filings that require interpretations of statutes and regulations. In cases with more complicated capital structures, or where it is unclear how broadly substantial control can be exercised. To reach legal conclusions for specific fact patterns, it is necessary to read and interpret the statute and regulations. There are no administrative rules, like those for practicing before the IRS, that allow non-lawyers to practice law in this area. A client may ask a brief inquiry about C.T.A. and their filing requirements. However, there is a risk involved in providing ad hoc advice. Responding to C.T.A. related one-off questions may not only lead to poor or incomplete advice, but it may also involve practicing law. Even though FINCEN and IRS are both a part of the Treasury Department, the privilege granted to federally authorized tax practitioners is restricted to the Internal Revenue Service. The importance of UPL will not diminish until states give clear and effective guidance on how a non-attorney may provide C.T.A. services without violating UPL unauthorized practice law statutes. Can insurance coverage protect a tax practitioner from any damages caused by C.T.A.? The assessment of insurance coverage for claims asserted from C.T.A. services is based on 1. The facts behind the claim, 2. The policy language that the insured possesses, 3. At the moment when the claim is reported according to applicable state law. Generally, an accountant's professional liability policy covers mistakes and omissions that occur during the provision of professional services. Professional services are usually referred to in policy language and generally involve services performed in the practice of public accounting. The C.T.A.'s interpretation of public accountancy practice is unclear due to its newness. What does C.N.A., who underwrites the AICPA program, do to assure AICPA professional liability? C.N.A., the underwriter for the AICPA insurance program, assured us that its accountant's professional liability insurance typically covers client work associated with B.O.I. reporting. Number 1. The professional liability policies of C.N.A.'s accountants typically cover professional services associated with C.T.A., but are limited by policy terms, conditions, and exclusions. If it is later established that B.O.I. work is considered an illegal activity, according to C.N.A.'s statement, its insurance will cover any work done before that date as professional services. Number 2. This applies to all its professional services coverage. Activities that are dishonest, fraudulent, criminal, or illegal are not covered, as per C.N.A.'s statement. Is it appropriate for a C.P.A. to provide a comfort letter in compliance with C.T.A.? Bank scrutiny is among the other risks that may arise if a C.P.A. offers C.T.A. assistance to clients. Because the C.T.A. is part of the Bank Secrecy Act, bank underwriters may ask practitioners to confirm a client's C.T.A. compliance in the form of a comfort letter or other documentation. C.P.S. should take extra care in scrutinizing comfort letter requests, as C.T.A. contains both criminal and civil penalties. How does data security affect a tax practitioner? In order to comply with C.T.A., the practitioner may need to gather data that is not commonly requested or retained. The added data may contain personally identifiable information that must be safeguarded under applicable laws and regulations. Practitioners already care about data security, and C.T.A. could lead to an increase in the number of data that needs protection, which could increase their liability for data security. Contact us. You can also call us at 516-822-3100, 631-623-5100, or send us an email at support@infotaxsquare.com. Visit website www.infotaxsquare.com. Office address: 2310 Hempstead Turnpike, Suite 3, East Meadow, New York 11554. Thank you and God bless you.